You're watching Masters in Trading Live with Jonathan Rose.
Hey guys, it's Jonathan and welcome to a very exciting Masters in Trading Live. You can see my wife got to my office and did some decorations. It's my birthday. It's my son's birthday. We were born on the same day. 17 years ago, my little guy was born on the very same day as mine. So this is a really exciting day. So Masters in Trading, guys, we made some big changes to Masters in Trading Live, and I'm going to walk you through those big changes right now. What are those big changes? Well, the first thing that we do is we play a morning Wordle game. Every morning we play daily Wordle, and then we're going to start Masters in Trading every single morning with a morning quiz. So first, the Wordle results are right here. This was a kind of a weird Wordle day. We had 3 people. Now in the Discord, we have many more than 3 people who got 1 out of 6. It was a pretty obvious word, especially for option traders, and we use it all the time in our Discord. So congrats to our Wordle winners, including myself. I finally put up a good Wordle score. And now we are going to go back to the Masters in Trading Hub. Anybody can go to this. Here's the URL right here. And let's go and test ourselves in the options quiz. What about an advanced quiz today, guys? Okay, ready? Let's do these A, B, C, D. We have 5 questions. I'm going to read the question. I'm going to read the answers. And you guys put in A, B, C, or D. What is gamma scalping? A strategy that's only for market makers. Trading the underlying stock against your options position to capture movement and reduce cost basis. Buying options with the highest gamma. Or is gamma scalping selling options right before expiration? So we have A, B, C, and D. What do we got? What is gamma scalping? Are we live here, guys? Talk to me. A strategy for market makers. B, trading the underlying stock, buying options with the highest gamma. Let me get a check-in, make sure you guys can see me. I am not getting my answers, and I assume that you guys would be answering this question because you know the answer. Rocket Man, thank you. You guys can see me. Can you answer this question, please? I'm going to answer this for us, and we're going to move on. Let's say, oh, the chat is broken. That's interesting. Well, I'm going to go through these anyway. You own a $15 call. You're up 300%. Let's say you sell the 22 calls against it. What have you created? A bull call spread, locked in gains with a max profit, $22, a bear spread, an iron condor, or a straddle. This is a bull call spread, long stock from 15 and short stock from 22. 2 out of 2. IV term structure is in backwardation. What does that tell you guys? When IV term structure goes into backwardation, volatility is low, time to sell near-term options, near-term fear is elevated. Yes. The market expects a move soon. Boom. Next, VVIX. We watch this all the time. It's the VIX of the VIX. What if we do it's VVIX is spiking while the VIX is flat? What does this suggest? The market is pricing in a coming volatility event. Options on VIX are getting bid. Time to sell all equity positions. VVIX and VIX are always correlated. Markets are calm. Okay. VVIX is spiking while the VIX stays flat. Here we go. I'm going to go here. Tough question. A stock shows massive unusual option activity. 20,000 calls at a far out of the money strike. What does that mean? Most likely somebody with size is making a very big directional bet. I have a cool example today of a 20,000 option trade. And here's the last one, guys. You own a straddle and the stock gets up 15%. The calls are up huge, but the puts, they're worthless. What do? Calls are up a whole bunch. Puts are not making money. Exercise the calls? Nah, that doesn't make sense. Sell the calls for profit, keep the puts? That's not a bad deal. I like that one. You see a stock's IV percentage at 5%? That's too low. Bad answer, but regardless. Well, 7 out of 7. Sadly, our chat is not working, but I'm going to move on and talk about our presentation today. And our presentation today is about ETF drag, because ETFs that hold any kind of SaaS products are getting absolutely destroyed, right? Absolutely destroyed. IGV is down 22% in 2026. About $1 trillion of market cap destroyed. Crowd down 39%. The problem, IGV, guys, is an ETF. I'm going to pull it up. IGV is iShares Expanded Tech. It's like a SaaS ETF that's absolutely just getting annihilated. But the issue with annihilating an ETF like this is that some of these stocks are a problem, but they're not all a problem. IGV holds Microsoft, all these different names, and there's some really good, strong stocks in here. Palo Alto now. Now, there are some shitty stocks in there. Adobe is not going to make it. It's just not. Salesforce is going to have a tough time. But that's what the drag is, guys. The ETF drags everything down. So how ETF drag works? Panic trigger. People want to get out. Market makers must sell all underlying holdings because it's a full-out basket liquidation. Indiscriminate selling, everything gets dragged down when the funds want to get out of SaaS names. The real opportunity is when everything gets beaten down, there's going to be some asymmetric entry points that we're going to be able to take advantage of. Also, IGV, do a little technical analysis for you, and I'll pull up a live chart on IGV. IGV, we're looking at a live chart, 5 years. These are weekly bars. For those who follow the show, the most powerful thing that we can have is weekly highs, weekly lows. Look at IGV. Last week's low, 79.91. The week before, 79.71, 79.27. And then this week's high, 79.49. Gaps lower under its 200 period moving average. Any trade over these lows, any trade over 80 is very, very bullish IGV. Let's continue the presentation. Survivors versus casualties. I did a whole bunch of research on this, guys. Here's the survivors. I think now, TYL, PanW, Microsoft. I think these four are going to have a very, very difficult time surviving. But that doesn't mean the entire ETF gets dragged lower. So the framework. What is AI going to replace? Think common sense. Asana, DocuSign, TurboTax, a lot of these CRM tools. But then AI is also going to increase the value of a ton of these different products. Think of, I vibe coded that MIT tool, the hub that we're using. Think of how much easier it is to create software. What companies are going to survive? Well, there's going to be a ton of security issues with all of these new apps coming. The security companies, I think, are going to absolutely survive. But put your common sense hat on. There's a lot that AI does really well, but there's a lot that AI cannot do. So you can consider a pairs trade between survivors and casualties of AI. We always say the creative trader wins. And right now, the world is changing so fast, but it's not all about everyone's going to be a loser. There are going to be big winners. There are going to be big losers. It's a matter of doing the work to figure out who survives and who doesn't. This was crazy, calling this the cybersecurity ghost trade. 2023, February, a couple of days ago, Anthropic just released Claude Code Security. News bombs. At any point, a news like this can tank an industry. IBM getting destroyed. Cloudflare, Zscaler, PanY. Market's not always right though. The market is pulling everything down. There are going to be winners. It's a matter for us to figure out where that winner is. So put this together, value compression. Now at peak 110 times. Now it's trading 24 times. TYL, these are names that historically trade at such high valuations, and for the first time, they are pulling way back. And literally free falling. Too much, too quick. Markets shouldn't move like that. There are going to be survivors of this, but don't feel like the sky is falling. Now, for a name like ASAN, DocuSign, for names that are easily replaced with AI, let's put our common sense hat on. We probably don't want to be long those, but there are going to be huge winners in this AI just taking market share from everything. I do like that IGV, guys. I want you to watch that IGV. And another reason to watch IGV, I gave you that level of 80, right? 80 is going to be our big time line in the sand for IGV. Well, looky here. These options expire in 3 days. Somebody is making a very big bet that IGV gets comfortably over $80 by this Friday. So for me, IGV, I wouldn't mind a little bit longer term, but you're not on your own here. Things are getting way too beaten down, and ETF drag is not something that we're making up. It's a very real thing, and it's happening right now in that SaaS industry. Not sure why the chat didn't work, guys. Hopefully you guys can watch this. What I always do is I branch off to our all access, and our all access, that's where we go over our live portfolio. Thanks so much for watching. Our chat will be good to go tomorrow. Thanks so much. I'll see you guys tomorrow. Lates.